Hey, welcome. Today, we're going to peel back the layers of what it means to run a business and figure out what success actually looks like. Because, it's not just about the money coming in, it's about all the hidden costs behind every single decision. Let's get into it.
We see profit numbers and revenue charts all the time, right? But they really don't tell the whole story. What are the invisible trade-offs? What are you giving up to chase that big dream? That's the real question we're going to dig into today.
And to do that, we are putting you right in the CEO's chair. So, congratulations! You've just started your very own lemonade stand. Yep, it's a simple business, but that's what makes it absolutely perfect for understanding some seriously powerful economic ideas. Okay, first things first. Before you can sell even 1 cup of lemonade, you've got to spend some money. This is probably the most obvious part of your business journey, the startup costs.
Now, in business speak, these are called accounting costs. Just think of them as anything you actually have to pull out your wallet for. They're your tangible, out-of-pocket expenses, the kind of stuff that shows up nice and neat on a spreadsheet.
So, for your lemonade stand, this is all pretty straightforward. You've got your ingredients, the lemons and sugar, your cups, and of course that all-important park permit. And yeah, even a little bit of the cost of your table, something we call depreciation, that counts too. These are the numbers you can easily track.
All right, you are all set up. Now it's time to actually sell some lemonade. But to price it right and really know if you're making any money, you need to understand how much each individual cup costs you to make. So let's break that down.
We're going to start with something called average fixed cost. See, that park permit is a fixed cost. You pay the $20 whether you sell 1 cup or 100 cups. The cool part is, the more you sell, the more you can spread that cost out, which makes each cup technically cheaper to produce.
And you can really see this in action right here. Let's pretend your total fixed costs are about $30 for the day. On day 1, maybe you only sell 10 cups. Well, that means each cup has to carry $3 of that fixed cost. But look at day 2. You hustle, you sell 30 cups, and boom, suddenly each cup is only carrying $1 of that cost. You got way more efficient just by selling more.
So let's build out the whole picture for that awesome 30-cup day. The ingredients for 1 cup, your lemons, your sugar, the cup itself, that costs you 50 cents. That's your average variable cost. Then you add that $1 of rent we just figured out, and you get an average total cost of $1.50 per cup. That means you've got to sell each cup for more than $1.50 just to break even. And you do it! You sell all 30 cups and pull in a total of $60. That means your average revenue per cup is $2. And since $2 is more than your cost of $1.50, you're making a profit on every single cup. Fantastic!
And, as you grow, you're going to start thinking about efficiency in other ways too, like with average product. So if you hire a friend to help out, you'll want to know, hey, how many cups of lemonade are we getting per worker? It's all about measuring how effective your resources really are.
Okay, so the daily numbers are looking good, you're profitable. But now we need to zoom out. Because making a profit day to day isn't quite the same thing as building a truly successful business for the long haul.
So let's fast forward a bit. Your little lemonade stand has turned into an empire. And at the end of the year, your accountant hands you this number, $50,000 in accounting profit. All those out-of-pocket costs are covered, and you've got 50 grand left over. Time to pop the champagne, right?
Well, maybe hold off on that, because economics asks a much tougher question. It doesn't just look at the money you made, it looks at the invisible cost of the path you didn't take. And this brings us to one of the most important ideas for any entrepreneur: economic loss. This happens when the profit you made is actually less than what you could have earned from your next best option. And that next best option has a name. It's your opportunity cost.
You can see the 2 different ways of thinking right here. The accounting view sees a $50,000 profit, simple. But the economic view sees that to run this stand, you had to quit your old job, which, by the way, paid you a salary of $60,000 a year. That salary you gave up, that's the opportunity cost.
So, when you take your accounting profit and subtract that big opportunity cost, you're left with an economic loss of $10,000. You worked all year, built a business, and you actually ended up financially worse off than if you had just stayed at your old job. It's a tough pill to swallow, but it's the harsh reality of making big decisions in business.
But hey, let's say you stick with it. You're determined to grow this business until it makes total economic sense. You decide it's time to scale up, but that leads to the next big question. Does getting bigger automatically make you better?
This is where we have to look at something called returns to scale. Sometimes, when you double your inputs, say you get a second delivery truck, you actually more than double your output. That's called increasing returns. But other times, doubling your inputs, like cramming way too many workers into one tiny kitchen, just makes everyone less efficient and your output less than doubles. That's decreasing returns. And this efficiency, or lack of it, has a direct and really powerful effect on how much each item costs you to make.
When you're getting those increasing returns, you achieve what's called economies of scale. You can buy lemons by the crate, get those sweet bulk discounts, and your average cost per cup goes down. But if you grow too big too fast, you can hit diseconomies of scale. Communication breaks down, things get messy, and your average cost per cup can actually start to go up. It's a huge reminder that growth has to be managed really, really carefully.
And that kind of brings us full circle. From a simple cup of lemonade to a huge company, the real story is never just about the money you're making. It's about the opportunities you're giving up along the way. So as you go forward, in business or just in life, always ask yourself, what's the hidden cost here? Thanks for watching.